Hello and welcome to CNBC TV18. I'm Malvika Jain and I have with me the Governor of the Reserve Bank of India, Dr. Shaktikanta Das. Dr. Das, welcome to CNBC TV18.
Thank you.
First and foremost, congratulations to you for being recognized as a top governor by Global Finance for the second time. What is the top achievements during the course of your tenure as a Reserve Bank of India governor?
I think the major achievement of the Reserve Bank of India has been, number one, navigating through this period of crisis of multiple shocks, the COVID pandemic followed by the war in Ukraine, in the aftermath of that, the synchronized monetary policy tightening. So multiple shocks the Reserve Bank has navigated with, I would say, a reasonable amount of success. Secondly, I think we have been able to maintain financial stability in our financial system. I think that's the foremost achievement which we have done. And third, I think in the area of technology, in the area of adoption of technology into central banking, into payment systems, I think by and large, these would be the three major achievements over the Reserve Bank of India over the last 5 to 6 years or so.
So you have mentioned before that the coordination between the government and the central bank has facilitated and enabled the economy to grow despite various challenges that the world has faced. You have a unique background. You have served as a finance secretary and now you're the governor of the Reserve Bank of India. How much do you attribute the success of the initiative that the RBI has taken under your regime to your unique background?
You see, it's like this. When you have worked in the finance ministry earlier and for quite a long time, and then you come to central bank, so you have an understanding of the requirements and the approaches of both the sides, and these are not necessarily conflicting sides. Each, that is the government, and the Reserve Bank, that is the central bank, they have their assigned roles in the economy. Because I was earlier in the finance ministry, I do have a good understanding of what are the expectations that side. And now that I am in the now that for the last several years I have been in the Reserve Bank, I get to know what is the perspective of the central bank. So basically, going forward while navigating a period of crisis, you know how to balance the objective of growth, which is the objective of the government, and the objective of price stability, which is the mandated responsibility of the Reserve Bank. I think these two agencies, the government and the Reserve Bank, they need each other for the success of the economy and for the economy to perform in an optimal manner. And there is therefore need for always a good amount of coordination. There may be differences of opinion, but there is need for good coordination.
So the global environment continues to be volatile. Does it mean that you might get a term extension? I mean, given your wonderful track record.
Well, I'll tell you very
honest. You've been asked this many times.
I have been asked this many times. Even yesterday I was asked this question, but I will tell you, I have still a few days, few weeks to go. And at the moment, I am just focused on my work and what is on my table. So beyond that, I don't, think, or that's not something which distracts me.
Sir, in terms of work, your hands are full. The festive season commentary that has come in from companies across sectors, be it FMCG, auto, etc. There is a softening of in the demand environment that we're witnessing. Economists polled by CNBC TV18 also believe that they may have to revise the growth forecasts downwards. The recently concluded MCP, though, was optimistic about growth. Do you have any concerns considering the commentary from the companies?
You see, I don't want to, I'm not in the game of one-upmanship.
Sure.
But last year, in all seriousness, when we projected higher growth, I think the opinion outside was that RBI was being too optimistic. But ultimately, the growth number which came was even higher than what we had projected. Today, as I am talking to you, in all seriousness, you see, there are some mixed signals. The festival season, the first quarter, the growth rate was lower than what we had expected. Second quarter numbers will come only at the end of November. Second quarter also, there was some unseasonal rains in the month of August, etc. Some activities got affected. But even in the festive season, there is some narrative that perhaps the sales figures and certain things have slowed down. But what I would like to emphasize is that there are mixed signals. There are pluses, there are some positives, there are some negatives. But I think the positives significantly outweigh the negatives. I'll just complete. the so-called slowdown in certain areas, that has been significant. That is getting, that is outweighed by the kind of positives that we are getting. And if I can just take half a minute more, you see, agriculture sector is doing exceedingly well this year thanks to a very good monsoon. The expectation on Rabi crop is very good. Rural demand has now revived. That is one area which was languishing for a long time. Even the first quarter GDP number this year at 6.7, which was lower than our estimate of 7.1. Even there, the consumption demand has shown significant revival. I think if I remember correctly, it was about 7.4 or 7.5, something in that region. And even now also, there are many high frequency indicators, like for example, domestic air passenger traffic, the two-wheeler sales, and there are several high-speed indicators which are which are exhibiting a very robust growth. The e-commerce in the tier 2, tier 3 cities are showing good numbers. So therefore there are substantial amount of high frequency indicators which indicate that the economy is doing reasonably well, and therefore, and let's also flag.
But what are the risk factors?
Let's also say that, let's also recollect, and I would like to mention that the IMF 3 days ago has projected India's growth at 7%. Sorry, I took a long time for that.
No, I just wanted to know, what are the risk factors?
You see, with regard to the risk factors, it's like this. First, the global geopolitical conditions continue to be highly uncertain. There appears to be escalation of the crisis in various fronts in the entire global geopolitical scenario. It's getting sometimes accentuated day by day. So that is a major risk. The geoeconomic fragmentation, that is the supply chain bottlenecks and the logistics impediments, etc., that also continues. And on top of that, volatile commodity prices. In fact, the latest round of, there is some increase in commodity prices, but that will play a major role in the inflation side. But coming to growth, it is the continuing geopolitical crisis, the geoeconomic fragmentation, and any extreme weather event which can have an impact on the external demand. And so therefore that is a risk factor to India. But by and large, again, India has always been, the growth in India has always been sustained by our domestic demand and domestic investment, both of which are, I think they're quite robust at the moment.
So that brings me to two questions on the impact of some weather changes. Climate change has been at the top of the agenda. You recently participated in the IMF World Bank annual meetings. What steps is the RBI taking to integrate climate risks into financial planning, whether it's some kind of guidance to the banks or to the entire financial system as a whole?
You see, on the climate-related measures, it's the government which is in the forefront. And let me also
But you also came out with a draft.
I'll just mention. But let me also add that, among the G20 countries, India is the best performing G20 country with regard to implementation of its climate related commitments. Coming to the central bank, we have taken a number of measures. We have set up a green finance group within the Reserve Bank of India. We have now launched green bonds, sovereign green bonds. We have issued regulatory guidelines for green deposits. And we have come out with several, what you are referring to, a discussion paper on, assessment of climate risk and risk mitigation. Now, based on that discussion paper, we would like to take it forward and issue certain guidelines for banks and other financial entities, particularly the lenders, to assess their risks in various scenarios of, hypothetical scenarios of intensity of climate events.
Another thing that you talked about and is obviously at the top of RBI's agenda is inflation control. You've indicated time and again that until and unless we see inflation in the around our 4% region, a rate cut is completely ruled out. If we continue to see growth, as you are expecting that the momentum will continue, so do we assume that rate cuts would not happen?
Inflation management, price stability is our primary responsibility, keeping in mind the objective of growth. At the moment, as we stated in the last monetary policy statement, as I have said, the growth and inflation component of our mandates are well balanced, they are well poised. So therefore we changed our stance to neutral. Now we have flexibility. We have now flexibility to watch the incoming trends and to sort of assess the evolving outlook and decide on what policy we will take. Now, growth is doing well. Inflation also has started moderating, and we expect the inflation to moderate as we go into November, December, and into the last quarter of this financial year. We expect the inflation to moderate, but then there are significant risks. I have stated it in my monetary policy.
Right.
Significant risks again arising out of geopolitical conflicts, out of geoeconomic fragmentation, weather-related events, and certain data which was released by the FAO with regard to food commodities and by the World Bank with regard to certain commodities like metal prices and all. They have shown quite a bit of uptick. So therefore, there are significant risks to the inflation outlook. We expect and we are reasonably confident that inflation is moderating, but then there are significant risks. So we have to be very careful. And we are in such a place, such a position where growth and inflation is so sort of well balanced that any premature move can upset that balance and, can affect our objective of achieving an inflation to reach the target of 4% or go close to 4% target.
So, sir, if I could summarize that, you feel that the growth momentum will continue and inflation is likely to come down.
That's right.
And until and unless there are some external factors which are beyond the control of the domestic economy, we could see a rate cut in the coming year.
Rate cut, when it will come, I would not like to comment.
Okay.
I think that will be a giveaway. And again, in all seriousness, I think it depends on the incoming data. And based on the incoming data, what kind of assessment, what kind of outlook, because inflation, monetary policy making is always forward looking.
Right.
We have to see what is the situation 6 months down the road, what is the situation 1 year down the road. So based on that, we determine and decide the future outlook. So based on that assessment, we will take a decision. I cannot give as to when we will do a rate cut or we will not do a rate cut. I cannot say, but we expect inflation to moderate. We have to be very careful. We have to be very watchful of the evolving outlook. And we should not do, as I said, again, I am repeating, we should not do anything in a haste, which will sort of again put us back in our objective of achieving the inflation target. In fact, interestingly, the household, the inflation expectations of households are also well anchored at the moment, because the household inflation expectations are, moderating for almost every round of survey. The household expectations are moderating by 10 or 20 basis points for the last 2 years. So we are therefore we are maintaining constant visit. We are watchful. We have to evaluate the risks and see how the risks are playing out. And based on that, when we have greater confidence of the inflation aligning with the target, that would be a time where we will see.